we'll make a start. Welcome everyone to our webinar today on buying your first pharmacy, the 5 things that matter most. We're joined today by Rob Hughes, who's a partner and healthcare specialist accountant with Pitcher Partners. Welcome, Rob.
Hi, Andy. How are you?
Very good, very good. Thanks for joining. Now, before we get into the content, I would like to acknowledge the traditional owners of the lands on which we conduct the webinar today. We pay our respects to their elders, past and present. Now, at the conclusion of the webinar, we'll be taking some time to run through some Q&A. You can drop questions in all through the webinar using the Q&A function on the Zoom menu, and then we'll save those up and get to them at the end. Any that we don't have time for, we'll come back to you subsequent to the webinar and make sure we get an answer to your questions. So send those through whenever they come to mind. So in terms of what we've got for you today, our agenda, we're taking you through the 5 things that matter most when buying a pharmacy, and they are building your team, understanding the listing information, which will form the basis of the information you'll use to arrive at your offer for the pharmacy. Third item, understanding your borrowing capacity and what you can afford. The fourth is structures for pharmacy businesses. And then finally, the questions that every buyer should be asking in the due diligence phase. We'll then wrap with some key takeaways and we'll get to your questions at the end. Okay, so we'll dive onto the first topic, building your team. There's a couple of things we want to leave you with here. The first is we strongly recommend getting pharmacy industry experts to support you. The reason being, pharmacy is a very nuanced industry with specific regulations, and the professional advisors that you appoint and pay to get you through the process, you really want them to be experts who can guide you, rather than generalists who have to learn the specifics of pharmacy along the journey. The second thing we wanted to land with you with regards to building a team is just who you'll need. So we recommend a finance broker. The finance broker will help you determine what you can afford, but then also give you your best chance of getting an approval for your application. Second is the accountant. So the accountant will help you with due diligence, business structures, which we'll talk a bit more about through the webinar today, and a host of other things. And then finally, the lawyer. So the lawyer will help with your contract negotiations, your lease assignment, state authority applications to Medicare, etc., and essentially just making sure that your interests are protected throughout the transaction. So that's the first point that we've got for you there, which is building a team. So we'll move on to our second item, which is understanding the listing information and the numbers. And since we've got an accountant on the call, I'll throw to you to talk us through the numbers section, Rob. So over to you.
Perfect. Thanks, Andy. Okay, so now when you're looking to buy the pharmacy and you come across the listing, you're going to be presented with quite a lot of information. And depending on how popular the pharmacy is, you may not have quite a lot of time to process that information and make a calculated decision on yes or no, do I want to buy this pharmacy? And okay, yes, I do. Well, how much do I want to offer for it? So that's where, from step one, you really need to have your team there set up and ready to go. So now when you're looking at this listing information, probably the first 2 points or pieces of information you're going to look at, and they go hand in hand, but they're not necessarily the same, is the asking price and the indicative valuation. So the asking price is simply, well, what is the vendor looking to achieve as a sale price for their pharmacy? And the indicative valuation, well, that is from a bank's perspective on what they're going to be able to lend against, if you're going to borrow to buy that pharmacy. It's a little bit different than when you go and purchase a home, where the majority of the time, well, the value that your home is assessed at is pegged to the price that you're paying. A little bit different in pharmacy. There's going to be that valuation that is the basis that the bank's going to use for how much they're going to lend against. So you really need to understand part of that valuation. Well, how is the FME, which is the future maintainable earnings, how is that being calculated, and what capitalisation rate has been applied to those earnings to come up with that value? You want to understand if there's any adjustments between the accounts and the maintainable earnings, and work out, well, are those adjustments plausible? Will they actually come to fruition? So once you've looked through the asking price and indicative valuation, you then want to have a look at the script volume. How many scripts are dispensed each year? And then you also want to look at not just that number that's dispensed each year, but what's happened over time. Look back over the last 3, 4, 5 years to see how that script is trending. Is the script volume growing? Is it flat? Is it declining? If it is in decline, well, why is it in decline? You also want to have a look at things like 60-day dispensing. What's the uptake been so far? What percentage of their script volume is eligible for 60-day dispensing? So these scripts could potentially turn into 60 days down the track. Whilst you're also looking at your script volume, you want to look at your dispensing profile. This is a type and the value of the medications that are being dispensed. When I talk about the type of medications, well, is the pharmacy selling a lot of, say, medicinal cannabis? Has that just come in over the last couple of years? What's the likelihood that those volumes will continue? Will they grow? Will they decline? You got to have a look through that. Have a look through whether there's any high cost drugs that are inflating that top line sales number. Also want to have a look at the referring doctors. So where is the scripts coming from? Which doctors around the area are referring the scripts into that pharmacy? And then finally, you want to have a look at the sales mix. Now, when we talk about the sales mix, we're talking about the split between the dispensary revenue and your front of shop retail sales. Is the pharmacy, if it's heavily reliant on that dispensary, well, what happens if there are government changes to the dispensing remuneration or 60-day dispensing? How is that going to impact that pharmacy, as opposed to a pharmacy that has maybe a strong retail presence that can act as a buffer between the any changes to that dispensary revenue? So when you look at the listing information, you're going to be presented with a lot of key numbers. If you're looking at an AP group listing, for example, over here, they're going to summarize the key data for you all on one place, which is fantastic. So it just really highlights those key points that you need to be looking at. Another spot where you really want to have a good look is the lease. So when you go and buy the pharmacy, you're going to take on that existing lease, subject to if you then actually, you may go and renegotiate a new lease as part of the purchase. But if you don't, you're buying into that existing lease that is there. So you want to have a good understanding of, well, how much longer do I have left on the lease? What renewal options are there? What are the annual increases? Are they a fixed percentage or are they a CPI increase? Are there any demolition clauses in that lease? So you really want to have a good understanding of what you're actually buying into there. So once you've worked out and you've worked your way through the listing information, you decided, yes, okay, perfect. I'm going to make an offer to buy this pharmacy. You then need to actually understand, well, what is my borrowing capacity? Can I afford it? I might throw to you here, Andy, being the finance expert, if you want to talk us through the finance and borrowing
Certainly
capacity.
can. Yeah, I certainly can. Thanks, Rob. So the role of the finance broker in the process is really three things we'll draw your attention to. So the first is, just as Rob said, you've got to understand your borrowing capacity, and the finance broker can help go through that capacity assessment phase with you. The second is to use the finance broker's network of lenders to compare all the offers in the market to make sure you're getting the right finance solution for you, as opposed to going to an individual bank and hoping that it's going to be the best and right one. And then thirdly is structuring your application in a way that gives it its best chance of success. So you only really get one shot at putting something in front of a bank for the first time. So you want to make sure it's a tight application, structured really well, and gives the bank confidence to issue an approval. So that's the role of the finance broker. And then we'll jump on to have a look at, what are banks actually looking at when they're assessing your application. So first and foremost, they'll have a look at the security or the assets that provide security for the loan. And here we're talking about the pharmacy itself. So they'll be taking the value of the pharmacy as the lower of the purchase price or the independent valuation. And we need to be able to give the bank comfort that this is a pharmacy that's got good future prospects, and will be a good business for years to come. The second thing that we want to give the bank confidence around is the character of the applicant. So can we evidence that the applicant has got good experience, broad experience, and the right level of experience to be able to manage teams and successfully run a business? And it goes a little bit beyond that. So they'll also have a look at your financial conduct. So if you've had a home loan in the past, have you shown an ability to meet those repayments and manage that facility? And have you shown an ability to manage your credit rating? So you paid your utility bills on time, you've got no defaults. So essentially, we can evidence based on all this past behaviour, based on all this experience, this candidate's going to be the right one to trust to lend money to buy this pharmacy. And then thirdly and finally, you've got to be able to show that you can meet the repayments for the loan that you're seeking to take out. So if you can convince the bank of those three things, you're well on the path to getting an approval. Now, we will take just a little bit of a deeper look at capacity itself. So how will banks assess your ability to repay a loan? And at a high level, it's a fairly simple formula that they'll apply. So they'll look at all of the income that you've got coming in the door, and then they'll look at all the expenses that you've got going out. And then is there a surplus at the end of that? So in looking at income, they'll be considering what your projected salary in the pharmacy will be, what the projected profits of that pharmacy are, and then any other income that's relevant to your household. So that could be rental income, for example. So they'll take the entirety of that income and then they'll look at the entirety of your expenses. So what are the costs of the loan that you're seeking to take out? What are the repayments? What are your ongoing living expenses? So to put food on the table, pay your utility bills, etc. And then finally, the cost of any other financial commitments you may have. And that could be a home loan, like we mentioned before. It could be a car loan, a personal loan, a credit card. Also, things like Afterpay and those sorts of facilities are factored in as well. And so the bank will then want to see that there's a surplus at the end of that equation. A couple of key things we'll call out to you here is the bank will do their test based on stress test or affordability interest rates. So typically around 9%, depending on the lender. Really, that's for the purpose of making sure that if the environment gets tougher or things change, that you've got the ability to continue to meet your repayments in an environment where interest rates go up or challenges present. And then the second thing we want to call your attention to here is just the impact that personal borrowings can have on your application. So if you are a borrower who's presenting to the bank with multiple highly geared properties, a bunch of credit cards and potentially a car loan there as well, all those things do feed into your ability to repay the pharmacy loan that you're seeking to take out. So it's not to say that having a mortgage is a bad thing or having a credit card is a bad thing. It's more to say having a think about the totality of those financial commitments that you've got if securing a loan for a pharmacy purchase is high on the priority list for you. So with that, we'll move on to our fourth agenda item, which is around business structures, and I'll throw back to you to cover that one for us, Rob.
Thanks, Andy. Okay, so the next thing you're going to have to consider is how you're going to purchase this pharmacy. You know, what type of entity/structure is going to operate it. Now, we could spend a whole webinar itself just on the different structuring options and when each structure is best, but we're just going to quickly go through them now. So your first option is to structure it as an individual, you know, i.e. as a sole trader. You own the pharmacy yourself in your own name. Key advantages of that is there's a low setup cost. You don't have to go and create a trust or create a company. All you really need to do is set up some registrations, register for an ABN, GST, PAYGW, and you're off and running. And there's low ongoing compliance costs too, because you know there is not a statutory obligation to prepare financial statements, though I would always recommend that you do. You don't have to, but then you also don't have to do a separate tax return for the pharmacy because that pharmacy income is going to be included as part of your own personal tax return. Another advantage of owning the pharmacy in your own name is going to be that you can access the general 50% CGT discount on the sale, and then you've got the whole array of the small business CGT concessions to use as well if you're eligible. Now, the disadvantage is that all of the profit of the pharmacy is going to be taxed in your own name. So if you've got a pharmacy that's earning $300,000-$400,000 in profit, well, you're going to be paying half of your profit at the top marginal tax rate, which may not be beneficial. There are better ways to structure yourself. So you could structure it as a trust. Now, the key advantages of owning it in a trust is the flexibility around the profit distribution. Now, the trust itself doesn't retain profit and pay tax. The trust will distribute the profit to its beneficiaries. So you may be able to then spread that income between your immediate family to achieve a lower overall income tax rate. A trust, also similar to an individual, it has access to the 50% CGT discount and also the small business CGT concessions, provided that you're eligible. Now, another key advantage with a trust is that there's some limited liability. Now, if you have a corporate trustee there controlling the trust, well, that's the person that if something goes wrong in the trust or person/entity, well, that's the person that's going to be liable and take on a lot of that liability. And if that's just a company with $10 of share capital, well, you've now got a barrier between yourself personally and the business in terms of your assets and if anything goes wrong. Now, that obviously doesn't cover if you've signed any personal guarantees for things, you're still going to be liable for those. Now, a couple of disadvantages with the trust is that all profits are distributed out, so they will go out to essentially individuals and be taxed at marginal rates. It's not an option in all states, and I'll touch on that a little bit later on. And if you're lucky enough to be in Queensland, the ownership rules have just changed in Queensland, and there's some tightening of the of trusts around that. So there's a little bit of work to do if you're in Queensland. So the third option is to purchase via a company. Now, similar to a trust, the company's great in that it's got that asset protection there, but a company also has a fixed tax rate. And for majority of small businesses, that's going to be at 25%, which is a lot less than the top 47% marginal tax rate. Another advantage of the company is you can have multiple owners and shareholders in there as well. Disadvantage around the company is that it doesn't get an access to that 50% CGT discount for when you eventually sell the pharmacy. So that's one to really watch out for. Now, the fourth option there is a partnership. Now, partnerships are great if you're going to purchase the pharmacy with someone else. So there's going to be some unrelated parties in there. Now, similar to the trust, the partnership will distribute its profit out each year. It won't retain the profit and pay tax. So the the profit is distributed out to the partners. Now, each partner can choose which entity they want to own their share of the pharmacy in. So you could have a partnership between a trust and a company, or it could be a partnership between two companies. So each person can pick which structure is best suited for themselves. So some things to consider when you're structuring the business. First is, where is the pharmacy located? Because in Australia, the ownership laws for owning a pharmacy and the rules and regulations around that are governed by the states. So each state has different laws. So for example, in Queensland and WA, for example, you can use a trust as part of your structure. Whereas in New South Wales and Victoria, they're very limited on trusts and you can really only use companies and individuals. Now, you also want to look at the tax implications both now and also in the future. Because if you're going to own this pharmacy for, say, 10, 15, 20 years, you don't just want to look at what your situation is now, because now you might be single and have no one else to be able to distribute profit to. But in 5, 10 years' time, you may have a spouse. In 20 years' time, you may have adult children. So you really want to be structured for the long term. You also want to consider the asset protection, as we talked about before, for you and your family. So what structure is best going to protect all of your assets? And then finally, how is the chosen structure going to affect your borrowings? So for example, if you're buying a pharmacy that's got quite a lot of borrowings there, you've bought a pharmacy for, say, $3 million and you've got over $2 million worth of debt there. Well, if you've purchased that pharmacy and structured it inside a company, and that debt to buy the pharmacy is also inside that company, well, you can use profits that have only been taxed at 25% to then meet your debt obligations. And effectively, if you want to then accelerate your debt repayments, you've got more profits there left over after tax than you would if you were owning the pharmacy in a trust or in your own name and you've had to pay tax at a marginal tax rate.
Terrific. Thanks for that, Rob. Now, just a reminder, guys, you can drop any questions that you have using the Q&A function on the Zoom menu. We've had a couple of questions come through already, a couple of good questions, which we'll get to at the end. So fire those through as they come to mind. So we've covered 4 topics for you so far. So those 4 topics that we've covered are all the things that you would do prior to submitting offers for a pharmacy. Now we're going to take a look at what you do immediately after your offer is accepted, which is the due diligence phase, and the questions that every buyer should be asking through that phase. I'll pass back to you, Rob, to cover that for us.
Perfect. Thanks, Andy. Okay, so when you go through your due diligence, and we're talking about your financial due diligence here, one of the most important things you want to look at is what earnings adjustments have been applied. If you've got a indicative valuation or a full bank valuation there, what adjustments have gone between the financial statements and that valuation? Because you want to make sure that any adjustments that are inflating the profit figure, you want to make sure that they're legitimate and sustainable. And this is where your industry experts really come in, because you could have, we're seeing at the moment, there's ACSS payments landing in the first half of FY26, which relate to expenses or scripts dispensed in FY25. So you want to make sure that you're getting the income lined up in the correct financial period. You also want to look for any expense adjustment, because the owners might have some personal expenditure running through the business that they say is not required. So they're adding that back and increasing the profit. So you want to make sure, well, is that legitimate and is that sustainable ongoing? Next, we will do a data integrity check. Now, what I mean by data integrity check is we're checking to see, well, what's presented in the financial statements, that profit and loss, well, does that match back to what's actually happening in the pharmacy? And does it also match to what's being reported to the tax office? So one check that we would always do is we'll compare the sales and the gross profit dollars that are coming through the profit and loss statement to what's going through the department sales report, out of your POS. Now, bear in mind, those two will never agree dollar for dollar, but there shouldn't be a large variance. Now, if we see a variance of more than 5%, we would query it to say, okay, well, what's the difference here? Why is there more profit going through the profit and loss than what's coming through the POS? We'd also then obviously check between what's being reported on the tax return and the BASs back to the financial statements, because your financial statements that are presented to you, they're not actually lodged with the tax office, whereas your tax return and the BASs are. So if there's any discrepancies between the two, you want to find out why are they different. Thirdly, we're going to have a look at the benchmarks. Now, this is where your industry expert really comes in, because you can do an overlay of benchmarks. When I talk about benchmarks, we're looking at things like gross profit margins, average sales per customer, sales per square meter, wages to gross profit, rent to sales, all these types of metrics. You'll be looking at assessing the pharmacy. Well, do they make sense? And are they in line with industry averages and other like pharmacies? If they're not, then why not? Raise the question. Moving on to wages. So if you look at the pharmacy's profit and loss statement, take out the, apart from the cost of goods sold, wages is going to be the single next biggest expense. So you want to have a good understanding of the staff roster and what it costs to run that roster. Now, quite often you can have owners working in a pharmacy where they're just taking drawings out. They're not actually on the roster paying themselves payroll. So you want to make sure that the cost of their time is factored in as an expense when you're looking at your maintainable earnings. And finally, have a look for what's not being provided. Are there any gaps in the information? Have I asked for key parts or key data that either hasn't been obtained or is slow to be provided? If it's something that they can't provide, well, then why not? What's happened there? Why can't that information be provided? So it's always good to work out, well, what's not there and why is that not there?
Terrific.
Yeah,
Thanks.
Andy, I might throw back to you for some key takeaways.
Brilliant. Yeah, thanks for that, Rob. So let's do that. We'll get onto the key takeaways. And so what we'd love for you to take away from the call today is firstly around the importance of building your team. The reason we say pharmacy experts are important. So the process from when you actually agree to buy a pharmacy all the way through to when you settle can be 6 months or more in some cases. And so through that time, you really want pharmacy experts guiding you on the key items. So if you've got the local family accountant or the local family lawyer, for example, and they're recommending incorrect operating structures for you, you can lose weeks and months through that process. And all of a sudden, that 6 month time frame to settle the business can blow out to 7, 8, 9 and beyond. And the risk there is when you finally get around to settling a business, 9 months from when you purchased it, often it could look a bit different to when you did purchase it. So the importance of getting the right team on your side is something we'd strongly recommend. Second to that is start the work now on understanding the listing information. So, what are the key metrics that you need to understand when exploring what to offer for a pharmacy, and understanding those? So, when the right pharmacy comes along, you can interpret them quickly. Third is understanding your borrowing capacity. Again, that's a step that you can take, today to understand what's affordable for you. And if it's not affordable for you right now, a finance broker can help give you a guide on where you would need to get to make it possible. The fourth, the importance of just having your business structure set up correctly first time. So those four takeaways, just to reiterate, as I mentioned earlier in the call, they're things that you do before making an offer for a pharmacy. And with AP Group, on average, pharmacies will be on the market for around about a month. The more competitive pharmacies can be on the market for as little as 2 weeks. So you really want to be organised with all of those four things, so you're able to act quickly and put in a strong offer for consideration by the vendor. So you've got those four things, and then the fifth thing after you've had a successful offer accepted is to move on to the due diligence phase and look under the hood. And again, we recommend using a pharmacy industry accountant to help you through that process. So that's the key takeaways, guys. We do have some time for some questions, so we'll dive into those. The first one I'm going to direct to you, Rob. What happens if I want to change my operating structure in the future?
Oh, good question. Yes, you can change your structure in the future, but it can be a timely and costly process. Now, because you're going to be changing from one entity to another, first up, you're going to have to consider, are there any capital gains consequences? Yes, there may be, but they may be able to use some small business rollover exemptions and that to mitigate that gain and push that down the road. So there's no cost right now. But then the other thing you've got to look for is, depending on which state you're in, is going to be whether there's any stamp duty implications as well. Now, there are some states that don't have the stamp duty on the goodwill. There's some that have exemptions available, but that's another consideration. So you've got those two finance considerations there, but then you also then need to considerate there's going to be a lot of admin that's going to become part of this. Your lease is going to change from one entity to another, so you're going to have to get a landlord's consent to change it over. You'll need a lawyer involved there to then help you with your PBS and Medicare, changing your registrations. You're going to have to set up all new supplier accounts in the new entity. All your employees are going to move from one entity over to the new entity. So there's quite a lot there that's involved in the process. So it's not to say that you can't do it. Yes, you certainly can, but just beware, it can be a costly and timely process to do so. So you want to get it right at the start.
Brilliant. Thanks, Rob. Another question here, how much will banks lend for the purchase of a pharmacy? So I'll pick that one up. So banks will typically lend 75 to 80% against the lower of the purchase price or the independent valuation. So as a purchaser, that leaves you with 20 to 25% to find, plus anything over and above the valuation to cover yourself. So if that sounds like a stretch, 20 to 25% is not within your means at the moment, there are some options there for pharmacy buyers to get some support for that particular piece. So if that's something that sounds like it could be important to you, feel free to drop us an email after the webinar and we can help you with some more information there. Now, we've had so many questions come through, and I regret we're not going to be able to get to all of them, but we will come back to you and get an answer after the call. So thank you very much for feeding those through. I'm just conscious we want to get everybody out of here on time. So with that, we'll move on to just saying a big thank you to everyone for your time today. In terms of what you can expect from here, you'll receive an email with a recording of the webinar, so you're welcome to forward that on to anyone who you think may find it useful. A couple of other resources to call out that could be useful for you. So the news section of the AP Group website has a whole bunch of content for first-time pharmacy buyers that could be useful, as does our YouTube channel. So that's got previous webinars that we've done, and a range of good content that you might find useful. Um, the email will also have a survey attached to it. So we'd love it if you could take 30 seconds to a minute to complete that survey for us. That helps us keep these webinars as useful and as relevant as possible for you. So with that, a big thank you to everyone for joining. A big thank you to you, Rob, for your time and expertise today.
No worries, Andy. Thank you very much for having me. It's been fun.
Thanks, guys, and we'll see you at the next one.
Thank you.
Bye.